Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Coming up in the next hour, a rally in tech pushing stocks to records. This as the U.S. continues to be the king of tech IPOs, with South Korea's version of Amazon, Coupang, now worth nearly $84.5 billion after its debut. We will hear from the CEO. Plus, speaking of newly minted public companies, we've got a date with Bumble after that iconic video of her babe in hand taking the company public. CEO Whitney Wolfe Herd joins me after her company's first earnings report, the stock skyrocketing 18%. And he went from flipping burgers at Burger King to flipping the fintech world on its head. I'll speak to the CEO of Klarna. At $31 billion, it is Europe's most valuable startup. All those stories in a moment, but first, tech stocks rallying. We've got tech companies DocuSign and Poshmark reporting after the bell. Our Ed Ludlow and Kriti Gupta are standing by with the latest. Ed, I'll start with you. You've got your eyes on tech's performance more broadly. What did we see?
Yeah, US equities hitting fresh records. And what's interesting is a lot of this is to do with the stimulus checks, which are on their way. But still that rally coming in technology. You can see the S&P 500, the main gauge of US equities, up 1%. But the outperformance in the tech-heavy NASDAQ 100 index, up 2.36% on Thursday. Philadelphia Semiconductor Index, that gauge of semiconductor or chip stocks, up 4%. We've seen a lot of volatility in that index this week, up significantly some days, down significantly others, but outperforming on Thursday. And I wanted to bring up Bitcoin, a little higher, but above $57,000. And what's really interesting, when we're in a risk-on mode, as we have been today, we've seen some symmetry between investors going into risk assets, tech stocks, and gains in Bitcoin. So I wanted to point that out too. Come with me into Bloomberg, though, and look at this chart, because the narrative around tech stocks has been one about rising bond yields and stretched valuations. This is the Invesco QQQ Trust Series 1 ETF, an ETF which tracks the NASDAQ 100 very closely. You can see on the far side, that bar last week, outflows, investors pulling money out of that ETF as we saw rotation into value stocks. In other words, those stocks that closely tie to an economic recovery, but some money flowing back in. So it raises the question, really, how long is this going to last? How long is there going to be this tie-off between tech rising and then a rotation into value offsetting it? Good question to going forward. Got to talk about the stonks, Emily. Got to talk about the stonks. GameStop actually lower on Thursday, down by almost 2%. What's really interesting is that AMC Entertainment, which is another favorite on the Reddit forums, another meme stock, up by almost 4.5%. And what we've seen in recent sessions is those two move together in symmetry, but that hasn't really been the case. And the final stock that I'm looking at, Churchill Capital, or CCIV, that's the SPAC that's agreed to buy EV maker Lucid Motors and take it public through a reverse merger. Incredible gains, up almost 9% on Thursday. So that's the picture with the markets broadly, but we did get some earnings after the bell on Thursday. Here's my colleague Kriti Gupta in New York, who's looking at what's going on. Kriti.
Thanks, Ed. Let's just start with those earnings stories. DocuSign right at the top of the bucket, really seeing those after-hour trading. Look at that, in the red, despite revenue actually beating estimates. Really tells you there's a high bar for tech already. Flip up the boards, and the other earnings story is Poshmark. This one makes a little bit more sense. An over 12% decline after their revenue actually missed estimates. So there are those earnings stories, not pretty ones in the stock, despite that action you saw on the tech side in the regular trading session. Flip up the boards one more time, and let's just take a broader look of how this compares to the rest of the tech industry. You can see on your screen right there, the average sales beat was positive by 5.4%. The average EPS beat was positive by 15.5%, yet the price action, not so positive. You saw that take a hit by about 1.5%. Really tells you that despite the good outlook for growth stocks, for tech stocks, it's really a high bar for investors to really buy into these names, Emily.
All right, Kriti Gupta in New York. Thanks, Kriti and Ed, for that roundup. Quick programming note, we will be talking to Manish Chandra, CEO of Poshmark, tomorrow about the company's earnings. You don't want to miss it. Meantime, tech giants and their cars. The latest buzz around Apple's foray into the car market and how the company might accomplish it. To build a car, Apple has three primary options: partner with an existing car maker, build its own manufacturing facilities, or team up with a contract manufacturer like a Foxconn or a Magna International. For more, I'm joined by Bloomberg News automotive reporter Gabby Coppola. Gabby, which way are they leaning? What do we know?
Hi. Well, I think what we wrote about today is that it kind of makes a lot of sense for them to work with a contract manufacturer. There's been leaks of Apple talking to different car makers. Hyundai, I think, was the most public one. But I think that it would make a lot of sense for Apple to kind of follow its playbook like it has with the iPhone and tablet and other products, in the sense that they're very good at managing a supply chain. They're used to having total control. And I think that could be an issue if they were to partner with an actual car maker that could be almost more like a competitor and a supplier to Apple at the same time. It might cause some wrinkles or some issues. Can you hear me?
Is Apple, Gabby, I guess the
Yeah.
question, is Apple ever going to make a car? We're still wondering that.
Well, I think that it does seem we're seeing some very clear signals that a car is coming. I mean, not just these talks with automakers that have leaked, but my colleagues and I reported a few weeks ago that they've been having talks with makers of LiDAR, which is basically sensors for self-driving cars, a sensor that is crucial for self-driving cars. And so they're basically, it looks like they're in discussions lining up their suppliers. And if you're really serious about making a car, you've got to do that years in advance. And they are doing that. So we're seeing some very clear signals that it really is going to happen this time. I think that it's still probably a few years away, but that's the timeline of a car. It's not software that you write and just publish instantly. It takes a lot of time to design, invest, manufacture, test for safety, all those kinds of things.
What kind of threat would this pose to the established auto industry and to Tesla especially?
Yeah, well, with Tesla, it is funny that you've seen Elon Musk on Twitter sort of, dragging Apple's efforts. So I think whenever he sees a rival on the horizon, he vocalizes that or he comments on that. And I think we've actually seen the same thing from the auto industry in the past few days. I think CEOs of BMW, Volkswagen, and Toyota have all commented on how they're not worried about Apple, or the car business is very difficult. So there's definitely something that's on their minds in terms of where they really have a competitive advantage. I think one, Apple is the strongest consumer brand in the world. So if they enter the car business, they're automatically going to have a lot of share of every motorist's mind, and that's a bit scary, I think. And also just design. They're known for design. If people love their iPhones, they love the sleek design of Apple products. If they can have that in a car, I can also see that being very appealing. Also, in terms of sort of data services, infotainment in the car, that's things that I think, Silicon Valley companies are always going to be better at that than the auto industry.
All right. Well, we'll continue to follow your reporting. Gabby Coppola of Bloomberg, who covers the auto industry for us. Thank you so much. Coming up, it is the first earnings report from Bumble since its $2.15 billion IPO last month. The results show optimism that social life and even dating is returning. We're going to hear from Bumble CEO Whitney Wolfe Herd next. This is Bloomberg.
I'm just so proud of our team for getting to this day. It's been such a journey. And for those first people that believed in us and subscribed to this radical idea of a woman making the first move, they have been really what drove this home.
That was Bumble CEO Whitney Wolfe Herd a month ago when the company went public. Just today, shares rising up 18%. Optimism that a return to social life and dating may be returning to normal as more people are vaccinated. The dating app reported its first earnings results yesterday. Fourth quarter revenue, $165.6 million, slightly beating estimates. As pandemic restrictions ease across the U.S., there's a lot of promise for in-person dating and, of course, Bumble. I caught up with CEO Whitney Wolfe Herd earlier to get her outlook.
What we are very confident about is that regardless of COVID or lockdowns, the desire and need to meet people is not going anywhere. As loneliness has presented itself in such an extreme way over the last year, we have seen engagement go up. But prior to the pandemic, even the statistics around how people meet, around 40% of people meet online. So you can see that this is very durable, either in a pandemic or post-pandemic period. And the one real silver lining of the pandemic for our business has been people's willingness to engage on a deeper and more meaningful level inside the product. So pre-pandemic, you were not seeing engagement levels to the degree that you're seeing today surrounding video and audio. People are building full relationships via video and audio. And we have heard anecdotally and started to witness through early reopening trends that even when people are given the opportunity to return to the offline market, the ease and the accessibility and the benefit that online dating has really proven, we believe that that's here to stay regardless.
So are you saying that you can't really separate out pent-up demand because the whole demand equation has completely changed?
So we think pent-up demand is really extra on top of just pre-existing demand for love and for relationships. I think the the pent-up demand nature of a post-COVID era is really going to extend well beyond dating as well. There is pent-up demand to go and socialize, to meet friends, to engage, to be with people. And we think that we will benefit from the reopening even beyond dating because of people's propensity to use our product for more than just romantic purposes. So pent-up demand even goes beyond romantic relationships.
So shares are way up today, still up since IPO, but there have been a few down days and we're in a really volatile market. There's a tech sell-off happening. What's it been like running a public company for the first few weeks? And how do you watch the stock?
So listen, our business fundamentally has not changed since we've gone public, right? And so we're still very anchored to our customer. We are trying to stay very focused on the things we were focused on pre-IPO. We're not watching the stock day to day. Even today, you just mentioned it being up. That is not something we are paying close attention to. We're paying attention to our metrics. We're paying attention to team morale. We're paying attention to customer sentiment. We are laser focused on building and continuing to invest in a great business. And we feel that regardless of the volatility in the market, our business continues to be a great one. And we are laser focused on just, executing against our priorities.
Now, there are quite a few analysts now covering Bumble. Citigroup talked about a number of different tailwinds, including the decreasing stigma around online dating, which you and I have discussed, and also a rise in older marriages. What kind of success are you seeing in Bumble matching older users? And could you see perhaps taking more share from a more entrenched company or more traditional company, I should say, like Match?
Absolutely. To the first point of your question, the willingness of folks across the age spectrum to join our products and to find meaningful relationships has definitely been on the rise. And the pandemic has actually been a propellant of that. We have noticed that throughout the pandemic, the stigma around online dating or the unwillingness to maybe find your relationships digitally, that has really gone out the window. And people are more willing now than ever. Not only that, but when you think about the increase of breakups or divorces throughout this period, and not only that, but people that were historically pre-pandemic so used to being hypersocial that they weren't interested in a serious relationship, that has all shifted. The quest for more meaningful relationships or second wins, new beginnings, that has really been on the rise. And we see this propensity for, what maybe was our young professional market. Their parents are now joining. Their parents are now joining, and everything in between. And we don't suffer the consequences of alienating our core audience, which has historically been college age or young professional, because of the way that we allow you to search for people within your desired age band. And so it really is a product for everyone. And we're definitely seeing a wider user base join.
So let's talk about Bumble BFF, which is your service that connects folks for friendship, not dating. You talked about that as a key development area. What should we expect to see you do there?
Yeah, so as we said on earnings, BFF is a focus of ours in 2021, primarily from a product relaunch, from product investment, from a strategy and marketing investment standpoint. And you should not expect a revenue plan around BFF until 2022. We are going to work on getting the product and strategy up to speed with where we believe it should be, and rolling that out in our markets, and really being measured, thoughtful, and very strategic as we go on to build the future of platonic relationships. And also as we go and really build community. I think that's a really exciting future opportunity for Bumble, and one we're very, very excited about. So that's what you can expect.
Bumble CEO Whitney Wolfe Herd there. You can catch that full interview at Bloomberg.com. Coming up, a new portable speaker just under 1 pound and a bit taller than the iPhone with at least 10 hours of battery life. Why SONOS is betting big on a high-end handheld. Details next. This is Bloomberg. You're looking at the new Roam speaker priced at $169, unveiled Tuesday. It can stream music via Bluetooth on the move or over Wi-Fi at home. The Roam's slightly taller than an iPhone, weighs just under a pound, has 10 hours of battery life. The company, which made its name as one of the early proponents of connected home speakers, has seen its shares surge almost 200% since going public back in August of 2018. SONOS setting a goal of $2.25 billion in annual revenue by 2024. They introduced this Roam speaker, the latest entrance into its high-end sound system, the company generating $1.33 billion in revenue last year. Joining me now to discuss, Sonos CEO Patrick Spence. Patrick, let's talk about the new speaker. How does this stand out from what you already offer and stand out from the competition?
Yeah, thanks, Emily. This really helps us get outside the home, right? So we've been very known for being in the home and having the best connected home audio system over the last 20 years. But this is a big step for us going outside the home. And it couldn't have been better timed, given that people are finally, going to be able to leave their homes and get together again. And so we think Roam is the perfect product at the perfect time. Obviously, it works inside the home with your existing Sonos system, but as well, we think it's going to appeal to a whole bunch of new people that have been looking at Sonos and interested in the system, but perhaps, either because of price point or just functionality, didn't feel like joining it quite yet. And so we think this will appeal to a whole new wave of customers as well.
So talk to us about how you double revenue by 2024. What are plans you have in the making and plans for recurring revenue as well?
Yeah, so we detailed this week our aspiration to get there, just like you outlined, and a big part of that is looking at the opportunity. So we showed people that while we have made a lot of progress, we're really only into about 9% of the addressable affluent homes we believe we can reach. We account for about 7% of sales in the premium home audio market every year right now. So even though we've done great to this point, there's a huge opportunity in front of us. And we have a great business model, which is good for the customers in the sense that they can buy one Sonos and then add more over time. And they've been doing that. So we're up to 2.9 products per home on average. And we think there's opportunity there to add even more products like Roam into new homes. And we have a roadmap and aspirations to get into all areas of audio. So we think we're building from a position of strength. And we think bringing in both new homes, right, which we set a record on in our most recent quarter in terms of a record number of new homes. We also had a record number of existing customers come back and purchase another Sonos product to add to their system. So these two things are really, giving us a lot of confidence that we can build to the 2.25 billion in fiscal 24. And we also, probably more importantly, set out the aspiration that we want 100 million plus people using our products and services. One of those services, to your point, is Sonos Radio HD. So we set an aspiration there of getting to 500,000 subscribers. We just launched that in November. It's been great. Sonos Radio is our number 3 listened to service already. So we're very excited about that and just creating great experiences for customers, curated stations, and really, building the top experience people can have when it comes to sound.
Well, speaking of audio, how far off are SONOS headphones? Will we see them this year?
We are very interested in all the categories of audio, but we don't talk about our future roadmap plans. So we do think we have opportunity in all these different areas. And so while we play today in about a $25 billion home audio segment, there's a $90 billion audio segment more globally as we think about things like offices, commercial. We announced auto this week in a partnership, our first toe in the water with Audi. Headphones, as you mentioned, there's a whole bunch of areas. So we're excited about the opportunity to be in all those categories. And I'd say, stay tuned because, we definitely want to be playing in all those different areas.
We've been talking a lot about the global chip shortage here, and obviously the supply chain was heavily disrupted by the pandemic. How has hardware development been impacted by the pandemic, and what changes in post?
Yeah, it's been a tough year, having everybody work from home, and we've really relied on people in the past working together physically, right? When you're ideating a new product or doing a first build of a new product. So our people have made some heroic efforts to figure out how to bring up new products, launch new products, and then deal with all of the supply chain disruptions of the last year. I mean, we faced everything that you can name. Chip shortage is just one, right? We've had the port delays. We've had COVID hit, different parts of the supply chain along the way, tariffs. I mean, there've just been so many different things. And I think, our team has set themselves apart in terms of being able to manage through all of these things. I think they've shown a lot of resiliency. We've come in ahead of expectations every quarter in the pandemic, which is pretty incredible. I think we're going to continue to see challenges like post-pandemic as well in the supply chain, but I think our team's up to the task ultimately. And it's kind of comes with the territory when you're building hardware. So I do expect, maybe unlike some of more of the fully digital companies or software-based companies, there is a place for, that physical presence and working together in offices when you're building, physical products. And so we do plan to return to the office in September. And I think we'll have more flexibility with our workforce, but I do think we'll also see a lot of people wanting to be back and working together and really collaborating to create, the next set of great products that we have planned.
All right, really interesting deep dive there. Thanks so much, Patrick Spence, CEO of SONOS. Appreciate you stopping by. Coming up, Coupang's big debut, how a Harvard dropout became a billionaire with what is being called the Amazon of South Korea. I spoke to the CEO. You'll hear from him next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Roblox continuing its surge Thursday after its stellar debut. The online gaming platform has seen its revenue and valuation grow as the pandemic continues to keep people and kids at home in search of entertainment. Part of the surge is thanks to Cathie Wood's $7.1 billion ARK Next Generation Internet Exchange Traded Fund, which has purchased more than 500,000 shares of Roblox, according to latest data on ARK's website. I spoke yesterday to the CEO of Roblox, talked about whether he saw any issues with scaling.
Most of our systems have scaled very, very well with our users. Our infrastructure scaling well, so we don't see any issue with scaling that moderation function, which forms the foundation really of the platform.
Roblox made a big splash in the public market, but they're not the only ones. Coupang, known as the Amazon of South Korea, also debuting today as Korea's largest listing ever. Joining us now to discuss, Bloomberg's Kriti Gupta. Kriti, walk us through the Coupang trade.
Thanks, Emily. Well, a 41% debut for what you said was South Korea's Amazon. Let's look at the Coupang surge here. That is just in one day. Of course, you did see a little bit of a pairing, some of those gains after that trading debut. I want to put this into perspective, though, with what you see with the largest Asian tech IPOs. Flip up the boards, and I want to show you the top 5 largest tech IPOs in the U.S. ever on record. Coupang, one of them, $4.6 billion But why now, Emily? Why such a surge? This really has to do with kind of the accessing of capital markets that you've been seeing a lot lately. Flip up the boards one more time, and you can see since the start of the year, this IPO index has really been surging, pulling back a little after that GameStop saga, but now once again on a tear. Thanks to Coupang, there is actually a lot of expectation that you could start to see even more people come to market, just given the massive trading debut that you saw. Emily, could just be the start of that IPO mania that everyone warned us about back in 2020, especially as we start to get some of those e-commerce, those tech giants, those tech players here in the States and abroad really come to market, really add some additional shares. Coupang may just be the start, Emily.
All right, Kriti Gupta, thank you so much for that update. We'll keep our eye on him. Sticking with Coupang, I spoke earlier with the CEO of Bom Kim, along with my colleague Matt Miller, to talk about the company's vision for the future.
We are here today because we focused on a long-term strategy, long-term vision. We've had teams and shareholders who've been aligned with that long-term vision. I think we'll continue to stay steadfast to that DNA.
So people compare you to Amazon. They call you the Amazon of South Korea. What do you think of that comparison? And how do you think about your competition with Amazon?
Yeah, we've been inspired by a lot of companies. There are a lot of great companies that we've certainly learned from. But I think our investments are quite unique, and it's produced some unique experiences for our customers as well. So, for example, our Dawn delivery, which is enabled by our end-to-end integration, order as late as midnight, deliver before 7 a.m. Not against the convenience store level selection, but against millions of items. I mean, you order right before you go to bed, you wake up to find it like Christmas morning every day. We also have gotten rid of classical trade-offs that you make when you choose online convenience, like box packaging. 75% of our shipments today don't have any additional box packaging. And in the case of fresh groceries, we removed disposable packaging, virtually all additional disposable packaging, by instituting our eco bags, because we're end-to-end integrated and our drivers are essentially picking up the empty bags on the way back when their trucks are coming back empty anyway. And that's really a result of really unique investment in not only infrastructure, but the technology that integrates it all.
Bom, I have to ask you about the way you treat your workers. Jeff Bezos and Amazon have received a lot of flack for the way they treat their workers, but you have had several deaths among delivery and logistics employees who were allegedly overworked, overnight working. How does the company answer to this issue?
You know, it's heartbreaking and it's a tragedy whenever there's a passing of one of our family members. But here's the context, an important context. We have hundreds of thousands of people who work in our operations and the fulfillment and delivery, and we've had one work-related death in the past year. But one is too many, and we have to continue to do better. We are actually leading the industry on this front. We were the first logistics service provider in our industry, in our market, to make 5-day work weeks the standard versus the 6-day standard of the industry. We're the first and still the only company that offers that employs their employees directly, that offers full benefits, paid time off versus the industry standard of nearly zero. We offer insurance to all our workers, even temporary ones, on day one. So and with this IPO, we became the first company to make all of its frontline employees shareholders in the company. We are going to continue to lead on this front.
It's a real concern for U.S. investors, and I wonder, after reports of more than one, of several deaths of your employees, what can you do to improve the situation?
As I mentioned, we have to continue to change and make the standards better. We are raising the bar and we'll continue to invest. We've invested hundreds of millions of dollars in automation that makes not only the deliveries better experience for our customers, but makes the work easier for our employees. And we'll continue to create good jobs, the best working condition jobs in the country, as well as invest billions of dollars in infrastructure that extends our network deeper and deeper and closer to the customers. 70% of the population lives within 7 miles of one of our centers. So you can see that we're continuing to innovate on this front.
Bom, you also invested heavily to keep warehouses safe through the pandemic, disinfectant. For example, the pandemic boosted growth. How has the company changed through the pandemic, and what are your expectations for growth post-pandemic?
COVID was challenging for us, and I think our teams, because of, again, of our integration, our technology, and the hard work of so many teams, we were able to maintain our delivery promise to nationwide 365 days a year.
My interview there, along with Matt Miller and Coupang CEO Kim. Meantime, our Ed Ludlow has been taking a look at just how much has changed since the pandemic, how much we have to talk about, and what will be different in the new normal. Ed, we've got a big week of special coverage next week to mark the one-year anniversary of the pandemic lockdown in the United States. What have you been watching?
Yeah, you know, this time a year ago, the declaration of a pandemic by the World Health Organization really brought COVID into the homes of many Americans, right? Because in the days that followed, there was such drama. First, the US government declared a state of emergency. The Federal Reserve cut rates to near zero, rippling through financial markets. On March 24th, President Trump said that he wanted the pandemic over by Easter, but as we know, with hindsight, that was just not simply going to be the case. You fast forward to the summer, in July, the grim milestone of 1 million deaths, and the CDC only recommending mask wearing in July, which with hindsight is a shocking thing to raise. But fast forward, to present day, the president said when he launched Operation Warp Speed on May 15th, they wanted a vaccine by year end and that it would be expensive. A vaccine was approved on December 11th, the Pfizer vaccine, closely followed by Moderna, and the first dose administered on December 14th. So we're at a stage now where 2.6 million deaths globally is a sad milestone, a fifth of those coming from the United States. But as policymakers and the private sector are now starting to say, there is light at the end of the tunnel as the rate of vaccination picks up and the rate of new cases drops.
All right. Ed Ludlow, thanks so much. We've got a big week next week. So excited. Lots of special guests. We'll be bringing you some of the biggest names in technology as we all look back on 1 year since the U.S. shut down. I'll be speaking with Moderna co-founder Dr. Noubar Afeyan, Uber CEO Dara Khosrowshahi, along with Peloton CEO John Foley, and co-chair of the Bill and Melinda Gates Foundation, Melinda Gates. You don't want to miss next week on Bloomberg Technology. Meantime, coming up, the buy now, pay later model is picking up steam, and one Swedish-born company is keeping up with its peers, PayPal and Affirm. We're going to hear from the most valuable startup in Europe, Klarna, amidst its big global expansion plans. CEO Sebastian Siemiatkowski joins us next. This is Bloomberg. To talk about Klarna, a new way to purchase goods at the virtual checkout counter. It is becoming increasingly popular with the next generation buy now, pay later, giving consumers the option to pay for items in installments or defer payments. Leading the pack are PayPal, Square, and Klarna, European startup. It is the highest valued fintech startup in Europe, recently raising $1 billion at a valuation of $31 billion. Joining me now, Klarna's CEO and co-founder, Sebastian Siemiatkowski. Sebastian, thank you so much for joining us late in the evening, your time. We appreciate it. So talk to us about Klarna and how it stands out from the competition, whether it's Square or PayPal. Obviously, all of these companies do different things, but there is some overlap.
Sure. Right now, there's a lot of focus on the buy now, pay later aspect of it, which is one great feature that has brought a lot of success for us in the US. We've gone live with Sephora, Etsy, Macy's, Ralph Lauren, Foot Locker, etc. But to us, that's always just been one feature. Klarna is the only payments company of our size. We have 90 million customers worldwide, 2 million transactions a day. We have 15 million customers now in the US, growing by 1 million a month. And there are tons of things that set us apart. One actually very key thing is that we have SKU level data on every transaction, which allows us to create a much richer user experience. And so as a consequence of that, if you look at what's happened in Europe, we've beaten PayPal on share of checkout of every country we're in, whether it's the Nordics, German-speaking countries, UK, and so forth. And we're hoping, obviously, to repeat that in the US as well.
Now, your valuation has tripled in a matter of months. What do you think accounts for that?
Well, you should probably ask our investors, but I would say that what we've always had is we've had very, very strong success in the US. And I think that among the closest competitors people most often compare us to, I think the perception and the impression is that we've moved from one of the players in the market to the market leader. And obviously you do get usually some kind of premium when you take a pole position like that.
Now, another one of your peers, Affirm, recently had a blockbuster IPO here in the United States. The CEO is Max Levchin, who of course co-founded PayPal. What are your plans to go public, and how do you see that as a sort of validation of what you're doing?
No, I think it's great. Look, I think at the end, I started this business with my co-founders 16 years ago. So we've been at it for a while. I hope to be at it for a couple of more decades. And what's fantastic is to be in this industry. I mean, we're really going after the legacy banks. We're going after the credit cards. Credit cards is not a great business model if you think about it. It basically is free for you and I. We get loyalty points and 30 days interest-free credit, but we rarely ask ourselves who's paying for it. And the unfortunate answer is that there's a lot of low income people that are revolving at 29% interest rate. And that's just not a great model. And buy now, pay later is such a much better model because it's equal for everyone. It doesn't cost interest for the consumers to use it. And consumers reward merchants with more spending through it. So I think this is a fantastic opportunity to change an industry that's lost sight on customers, that has legacy technology, and it's a massive industry. Like it's $1 trillion industry, the credit card industry. So I'm happy there are other players out there like us who also have the ambition to participate in what I believe is going to be the decade of disruption of retail banking. And I think we have the opportunity to do what Tesla has done to the car industry.
Well, and what about your go public plans? You mentioned in the past you'd prefer a direct listing over an IPO. Where's your thinking now?
I hoped I had kind of like circumvented that question. No, but honestly speaking,
exactly. No, I'm going to pin you on it.
No, I think we were. I think we've been actually quite consistent on this. I mean, we've had fantastic backing of our investors for a while, and we think we're getting closer to a point where that probably makes sense. We have not taken a formal decision yet, but it's not unlikely it could happen in the next year or 2 years. But there's no formal decision at this point.
Okay. Now, there has been a lot of scrutiny of this buy now, pay later model and criticism that you're encouraging, maybe especially young people who don't have a lot of money to get into a worse financial position. How do you respond to that?
Well, I think there's a lot of misconception in the market. I mean, we're regulated as a bank, so we follow very high standards. We have a full bank license in Europe. But when you look at it, there's a very different thing, right? So when you apply for a credit card, you get a limit, maybe $1,000. You can basically go, and the bank encourages you to go and spend for all of it and then just revolve on 29% interest rate. That's kind of the traditional model. What we're offering is saying, you know what, don't do that. Use a debit card for most of your purchases, for groceries. Don't revolve. Use installments occasionally. And difference also, when we provide credit, we give you $100 credit first time. And then consumers show us that they can use that in a responsible way, and then we extend that limit. So it's a very different model, and we've shown with our losses over the 16 years that we've been operating that we are below industry standard on losses compared to credit cards and other products. So I think there's a lot of misconception in the market, and to be fair, to some degree, I do believe some of this is fueled by the bank establishment that is getting worried that this, because only digitalization of banking products, that's great. But the problem here is that they need to fundamentally change their business models to compete with what we represent. And I think that's just slightly scary, to be honest.
Now, Bitcoin is picking up momentum again, going to new highs. I'm curious what your take is on cryptocurrency and how you see it being integrated into the business going forward.
Yeah, I'm always worried when I get that question, because then I always get a lot of people stalking me on Twitter and being angry with me. Look, I think that in general, I think, I'm always open to all new types of technologies and so forth. Where I am right now is I'm just a little bit worried. We have all accepted the fact that when you advertise financial products, you have some limit, some minimum amounts of disclaimers and information to people investing in it. And it feels like, for whatever reason, the regulators have forgotten that that should probably apply to this financial instrument as well. And just getting nervous that, you know, it's becoming so speculative. I'm just worried a lot of people are going to lose some money. That's so I as much as I'm excited about the technology, I am a little bit worried about participating in kind of building further on that, and with the risk of some people, you know, losing their savings as a consequence of not fully understanding the risks that it means to invest in a volatile asset like that.
Well, speaking of coming from humble beginnings, I understand you started your career flipping burgers, and here you are today. Any advice for young and up-and-coming entrepreneurs who want to be like you?
Wow, thanks. Well, flipping burgers is a good start, at least. I think. Look, no, I don't know. I wish I could say, but I think I've been very fortunate, very lucky in what we started. But obviously, we've been trying to just learn as much as we can, iterate and learn through what we do. And I think that if you stay very focused and you stay very committed, I think Klarna may be different than a lot of other tech companies. I mean, we weren't one of those who raised a lot of money and burned through it. We actually, our first fundraise was for $60,000, and we burned through half of it before we became profitable. So these were very different days, but we were very focused on just trying to provide a service for customers that they would like and want to use. And it turned out quickly that there was a demand for these type of services. So I guess it's just like that, you know, that like commitment and just trying, and eventually you'll make it work.
You also announced you'd give 1% of $1 billion that you raised to initiatives combating climate change. How's that going, and what prompted that?
No, well, I think that, like, look, when we started company, as I said, when I was 23 years old, I definitely hadn't figured the world out at that point in time. Neither have I now, probably. But what, you know, we just wanted to start a company, wanted to do something different. At that point in time, all of our friends wanted to go work at Morgan Stanley, Goldman Sachs. That was the cool thing to do back then. And we wanted to do something else. And starting a company back then was a very odd thing to do. I mean, 7% of university students at that point in time wanted to do it. Now it's 70%. So it was like that. But I think obviously as the company's matured and become larger, and we're you know, over $1 billion revenue, and we have all these users, and we transact, you know, $60-80 billion worth of GMV. Then we've come to the conclusion that, like, you know, now we can actually have an impact. We can contribute somehow to society that has allowed us to grow and exist. And part of that was that, you know, we obviously believe that if we can transform this banking industry that hasn't been great for customers, we can really do something great. But beyond that, we also realize, as I think everyone else right now, that, like, you know, we are living on a planet that is having some issues, and we felt to ourselves, like, what is at least something that we can do? And so we thought, maybe, you know, if we pledge 1% and we give 1 back on what we're able to raise right now, and invest it in initiatives to support sustainability on the planet and biodiversity, we can at least do something. And maybe we can also encourage other tech companies out there and fintechs that when they raise, they can also give 1 back to the planet, because without a planet, it won't matter that much what we do as a business.
Absolutely. Sebastian, thanks for staying up late for us from Stockholm. Sebastian Siemiatkowski, CEO of Klarna. We'll keep our eye on you. Okay, coming up, some are calling it a transformative moment for the art world. We're talking non-fungible tokens, or NFTs. One digital artwork just smashed records to the tune of $69 million. We'll talk about that next as crypto gets collectible. This is Bloomberg. A few other tech stories we're following today. In the world of art, NFTs, or non-fungible tokens, they've become the hottest things. The digital file acts as a certificate of authenticity for an object, real or virtual, that runs on blockchain technology. Thursday, a digital artwork less than a month old, hammered for $60.25 million at Christie's in New York, and with buyer's premium comes to a record $69.3 million. Every day, the first 5,000 days is a mosaic of every image that artist Mike Winkelmann who goes by the name Beeple, has made since 2013 and doesn't come with anything physical attached, like a box or a plaque. Christie's made waves last month when it announced it would start accepting cryptocurrencies as payment. And that does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. Tomorrow we're going to talk about vaccines, COVID therapies. The president and CEO of Holy Name Medical Center, Michael Marin, will be joining us. At the height of the pandemic last year, March through May, it had nearly 300 COVID-19 patients. We'll talk about lessons learned, breakthroughs in science and technology, and more. And you do not want to miss next week as we examine 1 year since the U.S. shut down with some of the biggest voices in science and technology. Some of our guests here, including Uber CEO Dara Khosrowshahi, John Foley, the CEO of Peloton, Nubar Afeyan, co-founder of Moderna, and Kelly Steckelberg, CFO of Zoom. All of that to look forward to next week. I'm Emily Chang in San Francisco. This is Bloomberg.